Are stocks out of the woods yet? Are we setting up for an end-of-the-year rally? Tim, what do you say?
Well, hello, Mel. Well, we're certainly out of October, and so we got these, a couple days in a row. Everybody knows this stat now. Actually, if you hadn't gotten that erroneous, I think it was erroneous, headline on trade tariffs 3 days ago, we actually would have strung 4 days in a row together. What are the concerns that took us down here? Well, ultimately, I think it comes down to valuation for the S&P. So we've had pretty good earnings this week. In fact, the companies that needed to perform, especially whether it's Facebook or even GM today, places where the industrials were being pushed around, you actually got it. I think the bottom line here is that valuations for the S&P right now, I don't think are extraordinarily cheap. And I think that the dollar, the Fed, trade tariffs, and Angela Merkel are big issues for this market over the next 3 to 6 months.
Dan?
Yeah, I think the dollar's an important one. I know Tim brought it up earlier today when we were on a call. And, trading the Dixie at 97, we think about rates, 10-year yield back at 3.14. We think about the Fed meeting at November 8th. I think the language there is going to be very important, and no one's expecting an increase right now. I will say that after the markdown in the S&P 500, valuations kind of favorable, right? And you look at a name like Facebook, I know it's a stock that,
Hold on.
Wow.
Is Dan being constructive?
What I'm saying is that, listen, one of the things that I don't like to press lows. We just had a pretty dramatic sell-off in a short period of time. I don't think it was particularly panicky by any means. I think it was panicky in a handful of stocks that we've been talking about. If they all go down together, it's going to take the market down. And that eventually happened. I just want to make one really important point. We bounced off at 2,600 in the S&P 500. If you go back and you look at the last times that we had 10% plus sell-offs in the S&P 500 from an all-time high, it happened in the summer of 2015. It happened in Q1 of 2016. It happened in January and February of this year. What happened? They retested that prior low. And I think there's a chance that we have a few more percent to the upside, and then we go back and test that 2,600 at some point in the not-so-distant future.
I think it sounded positive to start.
I don't know.
Yeah, it started off great.
Good.
I
Just
know.
sort of.
It sounded good. Days like today, well, they're fun. They're not. I don't really love them actually so much either. You feel like, oh, have I completely missed it, or have I to wait to come in, or do I want to buy it here anyway? I mean, to me, it's interesting. We're getting as 80% through earnings. So then, what drives us when it's no longer earnings? That's a little scarier to me because we have midterm elections. We have the Fed, and we have the trade situation. Those are three big things that all could be potentially really market moving. So I get a little bit nervous. I like to pin what I buy or sell on fundamentals. And so we're sort of moving out of the fundamental phase. All that having been said, though, I thought...
At the same time, I mean, these events, they seem to be asymmetrically priced into the market. I mean, right? You take a look at the midterms,
yes.
I think the markets are pricing in Democratic win in the House. The Senate will remain Republican. On trade, trade, if there is a deal or some sort of upside...
You think trade's in the market? Or Karen or Pete?
No, I'm saying that a deal is not priced into the market. So if there's any bit of incrementally positive news coming out of G20 in Argentina, that could provide the market with some reason to move higher, sharply higher.
I would also argue that I don't think that negative trade consequences are priced into the market. In fact, I think the S&P at 170 on most people for earnings next year, up 7%, quickly goes to 150. Even
Negative trade consequences
impact.
meaning what? Meaning the next round of tariffs go into effect in December, meaning the old tariffs go up to 25% come January?
25%. I think the S&P has a moderate impact on earnings, which takes you down to at least flat, not up 7%, which will affect valuation.
Yeah, and I would say it's midterms combined with trade. I mean, I think that's the entire thing right now. And the other thing is there an all clear that's been run out for all of us? I don't think so, because volatility is still trading above 20. I mean, I think the fact that we're trading somewhere between 21 and 22, when we had that VXX buying last week, that signaled something to me that we were going to get an explosive move. Now, is that already come and gone by getting up to 29? I don't think so. I still think that we are in a position now where at some moment the algos take over once again, like they kind of did at the end of today, quite frankly. If you look at the end of the trade today, we were up 400 plus points. And before you could blink an eye, the closing bell comes up, we finish up 240. I think that's all algorithmic, and I think that
has something to do with month end, fiscal year end.
Absolutely.
And so here's the setup, though. I think it's kind of dangerous. If you were to press that last hour of selling, what happens in the first of New Year or first month of first days of the first month? That sort of thing. I think it's a dangerous setup to be pressing it right now without any specific news. One way.
I thought the rotation was interesting today, though, right? So retail, which had actually been doing pretty well up until yesterday.
Yeah.
So that was sort of, all right, that's going to be a source of funds now.
Staples got hit.
Staples got hit. But we've been talking about Staples as not a place to hide. Too expensive. banks had a big rally today, industrials big rally today, tech big rally today. So I don't know if it's day
and
one.
FANG got a little bit of that lift, and I think because of the fact that the deceleration of what people expected, how bad it could be for Facebook, wasn't there. And advertisers are still there. I mean, the combination of those kinds of things, does that mean they're out of the woods? Absolutely not. I think Facebook still has some major pressure, but Zuckerberg talked about, hey, look, we've got a lot of different areas where we think we have monetization possibilities, and that is something we already have priced in my opinion. Hey, we're spending a lot of money, and they are, because they've got so many. Yep, and the growth of Facebook is slowing, but other parts of Facebook, I think, still have growth.
Just quickly on global macro, China PMI last night was missed on the state number, and then when you get the private number tonight, you actually could print with a 49 handle, which means contraction. I think that's concern. I think the news out of the EU over the last couple of days about Angela Merkel resigning as head of the CDU basically means she's out as chancellor sooner than people think, and that has been the one stability part of Europe. I can't underestimate how important that is. It's not tomorrow's trade, but it's absolutely 2019 first quarter trade.